Hello guys, welcome back to my channel. If you are returning viewers, I say welcome back and happy new year. If you're new to my channel, my name is Religious, and thank you for stopping by. So I document my trading journey here on YouTube, you know, and I trade only gold. So today I will be going through my gold analysis. This will be my first analysis for the year 2026. So without wasting much of our time, let's just dive in swiftly and see what we got for today's analysis. So here is my trading view chart, and as you all know, I start my analysis from the daily time frame. So this is a daily time frame now. So I oh sorry, this is okay. Let me go to daily time frame. Yeah, this is daily time frame. So now I usually uh know my bias for the day from the daily time frame. So now, as we can see that the previous day candle swept the previous 2 days candle low and they closed below the low of previous two days candles. So now, and we're having known that the overall trend of the market, I mean, gold is bullish. So now, in this case, we have this sweep and close below the, I mean, close above the low of the previous candle. So now, as you can see, this candle, previous day candle that was on the 31st of December 2025, was inside bar to on Thursday to that of on Thursday. I mean, yeah, to, on sorry, on Tuesday. Yeah. So in that case, we experienced a swept here. So what we're going to do now is we bring out our vertical line to mark out the sweep and the beginning of the last candle and today's candle. So now let's quickly mark it up and continue with our analysis. So I will mark it out this way. Uh, uh, a second, guys, please. Just a second. Okay. So now, right? So this is we'll mark it out this way. Now this is a sweep. That was a sweep here, right? Right, and let's say this sweep, right? And we have a vertical line here, a vertical line here, and today's candle here. So now, so this is it. This is basically here done. Yeah, so we now go to 4 hours and know what is going on there. So now from here we know that we are looking for a buy setup. Now we go to 4 hours then. So now this is our 4 hours time frame. Now from our 4 hours time frame, we can see that we had a very bearish momentum to the downside here, so leading to sweep of liquidity around this zone. Around this zone, yeah, there was liquidity sweep around this zone. You can see. So liquidity sweep, yeah. So there was liquidity sweep around this zone. Market swing liquidity here and close above, market didn't close below it. So, and we still have a push to the down to further sweep this liquidity. So now let me try and explain according to my understanding. Now, so we had this was we had this is a pullback and we had a break of structure here, but the market didn't close above the high. So let's say our new high was transferred to here. Our new high was transferred. Oh my goodness. I think I see here. Our new high was transferred. I'm looking for a particular high commander. I can see it. I can see it. So we have our new high here. Our new high here. Our new high here. Right? Now, and there was a pullback again. Yeah. So and break but didn't close above it. So and to confirm our break of structure, we need a proper close above the previous high, a proper close of a candle above the previous high to confirm our break of structure. So, notwithstanding, we had our internal break of structure here. That's the internal break of structure to the downside here. We added there, and so that's the internal break of structure, right? We had it here. So, and this is a markets continue the downward momentum here, then pull back to this place. So, I'm breaking this high created here to the upside, which signifies a bullish, internal bullish choke, internal bullish choke. So, but price is not yet there, so we just have to mark it. You know, I'm a reference to it. So now, so we are seeing that there was a sweep here, and the buyers are trying to take charge of the market. So now we cannot actually deduce from the 4 hours time frame. There is not much information from the 4 hours time frame. So now we have it in mind that we are looking to buy to go long on gold. So now let's quickly move to 1 hour. So mind you, this from our daily time frame, we've marked this place as a sweep. Yeah, this was a sweep. This was on the previous candle, last 2 days candles, last two daily candles. This is the low. Then the previous that was on 31st sweep. You see from here. So there was a sweep. And after the sweep, you can see the immediate bullish candle to the upside here. So now, what are we looking for? Since we are seeing this from the higher time frame as a sweep, right? And look here, something happened. This is this choke, bullish choke, internal choke. Is from the higher time frame. And mind you, if market structure, market structure, right? So the lower time frame usually um usually shows you what market is trying to do. That's lower time frame shows you first what higher time frame is trying to achieve, right? I don't know whether you get what I'm trying to say. Like if higher time frame is trying to go bullish, then from the lower time frame you will see the effect of the bullish momentum before the final effect on the higher time frame. That's exactly what is going on here. Now look at where the internal change of character from the 4 hours time frame, see it here up here, and the internal change of character to the upside from our 1 hour time frame. Look at it here. This is it. This is it. Can you see? Can you see it? So you can see that internal change of character. That's this one is from our 1 hour time frame. So now we are looking for, and mind you, from our this same 1 hour time frame, this place now is a break of structure. Let me say slash break of structure. Mind you, yeah, the swept was from the daily time frame, but in 4 hours it was a sweep. Yeah, it was a sweep, and 1 hour is showing as a break of structure, right? And the high that created this break of structure, that was responsible for this break of structure, is our what it called is our 4 hours internal choke, which is this place. This is the high that is responsible for this break of structure. This one is just internal. This little high you are seeing here is internal, because after this, the down this swing low created here, there was a big pullback, you see, and this lower swing, internal swing low created here, didn't break the previous swing. This is the main swing created here. So this is internal to this. So that is why this we are not picking this I as a I that was responsible for the break of the structure. This I is just inducement liquidity. So according to my knowledge, the way I understand it is just an inducement liquidity. But the major high that was responsible for the break of the structure is here, which is also an internal choke to the upside from our 4 hours time frame. So now let's go, guys. So now we can see that everything is working hands in hand. Everything is pointing towards the same direction. So now what we're going to do is we've marked out from our 1 hour time frame. We've seen that the market is has a tendency or probability of going bullish, right? So and we cannot actually say this break of structure is really pronounced. I mean, this change of character is really pronounced because immediately after the change of character, price tried to close above the high here, but the sellers push the price down. So now let's go down to 15 minutes time frame. So now we should be eyeing this place. We should be eyeing this place. We should be eyeing this place. What is this? Oh my goodness. Okay. We should be high in this place, this FEG right here, to go long from here. Let's just mark it, you know, as our um, as our demand zone in a 1 hour time frame. So now, mind you, from our one daily time frame, we are looking for buy. Why? Because there was a sweep. There was a sweep here, a sweep of previous candle, right? So because of that, we are looking to long gold. So to be in line with the overall trend, which is the overall trend of gold is also bullish. So now we've marked out our FEG in the 1 hour time frame. Now let's switch to 15 minutes and see what we got here in 15 minutes time frame. Now, as you can see, what we have as a sweep in the daily time frame in daily time frame is a actual break of structure in 15 minutes time frame and as well a break of structure in 1 hour time frame, right? So now let's continue. So this is a break of structure, right? And here now see something. An internal chalk to the upside has already been created here. Look at it here. Internal chalk has been created here. Internal chalk has been created, and this low is still protected. This low is still protected because this look at the swing low here. So because of that, we have our internal chalk here. Our 15 minutes internal chalk has already been created. So and there was a pullback to mitigate this order flow here, which is responsible for the internal chalk, right? Right. So price mitigated this order flow, and now this is another break of structure here. You can see the lowest. You can see the low here, and now we have a break of structure here with a big FEG. So break of structure. Now, now you can see price is consolidating here from our 15 minutes time frame, right? So mind you, this FEG we marked here that is now that is responsible for the break of structure in 15 minutes is actually an FEG in 1 hour. Are you seeing how everything is correlating? So now this is going to be our point of interest. Our point of interest, this unmitigated order flow from our 15 minutes time frame. Can you see? It was responsible for the break of that's this break of structure is internal break of structure from our 15 minutes time frame. So now for gold, I actually positioning myself here to long to go long on gold. Yeah, I will be here. My yeah, what's it called? My stop loss will be here, and I'll be targeting here the internal chalk from our 4 hours time frame. Yeah, I'll targeting here, which is exactly risk to reward ratio of 3. Risk to reward ratio of 3. So mind you, now the coordinates are the coordinates. mm, by limit coordinates. Now, limit. price. So our buy limit price, my buy limit price will be 4,324.79, and my stop loss will be 4,298.36, and my GP1 will be 4,404.08. So now we can actually hold this trade till here. We can actually hold it till here. So our TP2, we can hold it here. Yeah, we can hold it till that place. So to give us a 4.14 RR, then TP2 can actually be 4,434.18. As you know, this is a bullish trend. So let me go to 1 hour. So yeah, this is a bullish trend. So we are in line with the overall trend. So if we like, we can swing this trade, and hold it until. So our final TP, which is a TP3, is going to be 4,545.64. So guys, this is a buy limit coordinate for gold, and right now we just actually wait for price to get to come to us. So we'll go long. So if we are able to hold this trade to the final TP, we'll be getting 8 risk reward, 8.36. Our risk to reward ratio will be 8.36, which is actually good. So remember, guys, the way I do my things is I don't risk more than 1%, between 0.5 to 1% of my trading capital. So that's it. Actually, let me show you my funded fund. So look at it very first. So my first 15K account, which is in phase 2, I'm down with the 5.03% in drawdown. I'm only having left with $745, which is like it's like 5% remaining out of the 10% of total drawdown. So that is it, guys. And for the second account, well, I'm really struggling, to take this account, to even pass the first one. But I know it's doable. Of course, I'm going to pass the account by the special grace of God, and sticking with my strategy. I know what actually happened. It was because I tried to tweak my strategy. I mean, try to change my strategy just because I was testing something else. So that's it, guys. First account, which is in the second phase. I'm in the 5% drawdown, and the second 15K account, which is still in phase 1, I am in 1% profit. So that's it, guys. So that's it for gold, and my take for gold this week. Gold is buying, and we have positioned ourselves. I've positioned myself in a strategic place, to ride the bullish momentum. So that's it, guys. This is where I will be dropping it for today. So see you some other time. Thank you for watching. Bye.
Okay, let's go.